Welcome to On My Way to Wealth, the podcast where busy Gen Xers can learn financial tips as they navigate life on their way to wealth. And now, please join your host, Luis Rosa.
Hello, everyone, and thank you for watching this webinar and also listening to this podcast. I hope your family and you are well, healthy, and safe. The economic stimulus just passed, and I wanted to talk to you a little bit about how it might affect you and also some things you can do during an economic downturn. My last episode, I spoke about things you can do to prepare for economic downturn, but the best time to plant a tree was 20 years ago. However, some of us might not have been as ready to deal with what the current situation is providing for us. So we have to deal with what we have right now. So I wanted to expand a little bit on my last episode and talk about things that you can do today to navigate through this economic downturn. We're not officially in a recession by definition because we have not had 2 negative quarters of negative downturn in our GDP, but we all know it's coming with the impact that the coronavirus has had on so many businesses and individuals. So let's get right into it. The CARES Act was just signed into law. It's short for Coronavirus Aid, Relief, and Economic Securities Act. So the first thing I wanted to do is talk about the impact on individuals. Then I'm going to talk about the impact on small businesses. And then I'm going to give you some resources and some tips that I think will help you along the way. Number one thing for individuals, a one-time payment of $1,200 for individuals with an adjusted gross income of up to $75,000. If you filed head of household, the adjusted gross income is actually a little bit higher, $112,500. Now, if you made over those amounts, it doesn't mean that you don't get it. You just get a reduced amount. And I'll show you what the final outcome will be in terms of the full phase out. If you're married filing joint couple, you get a one-time payment of $2,400 if you made up to $150,000 in adjusted gross income. Also, if you have eligible qualifying children under the age of 17, you'll get an additional $500 per child. The amounts are reduced by $50 for every $1,000 above the threshold. So it completely phases out after $99,000. So in other words, if you make under $75,000 as an individual that you filed either single, married, filing separate, you will get the full $1,200. If you make over $75,000 but less than $99,000, you'll get a reduced amount. I'm actually going to provide a calculator in the resources section so that you can enter your numbers for either your 2018 or 2019 taxes and figure out what the stimulus is for you. If you're head of household and you made up to $112,500, you'll get the full amount. If you make over $112,500 but under $136,500, you get a reduced amount. And if you made after $136,500, then you don't get anything, unfortunately. And for married filing couples, the phase out will be $198,000. So if you made up to $150,000, you get the full $2,400. If you make between $150,000 and $198,000, you get a reduced amount as a married couple filing jointly. After $198,000, it goes away completely. Now, how would the IRS know where to send you the payment? These payments are going to be sent based on the tax information that is the most current that the IRS has on file for you. So, for example, let's say you have not filed your 2019 tax return. The IRS is going to try to direct deposit that check using the direct deposit information that you had in your 2018 return. So if you switch banks since 2018 filing, the IRS is still going to try and send you the check to the 2018 return if you have not filed the 2019 return. Now, if that check bounces, obviously they'll just turn around and mail you a check. So you want to make sure that you have the most current up-to-date information. If you have not filed your 2019, you might want to consider filing if you made less money than in 2018. So that's something else to consider because they're going to use either or. So there's some room for planning there. Also, if you moved since you last filed your tax return, there's a Form 8822, which I'll provide a link to in the resources as well, that you can use to file with the IRS and change your address so that you make sure you get the check to the correct address. Now, if you don't qualify based on your 2018 or 2019 tax returns, so let's say you're an individual, you made $200,000 in 2018, you don't qualify. And then you made 150 in 2019, you still don't qualify because you made over the 75,000 and over the face that amount of 99. But let's say this particular year you got laid off because of what's going on with coronavirus, et cetera, and you end up making less than 75,000. Well, next year in 2021, when you file your 2020 tax return, you'll be eligible for a credit. It's unfortunate you have to wait for a full year because you probably need it today, but you won't miss out on it completely. Now, let's talk about when these payments are expected. As of now, the Treasury Secretary said that they expect to send these checks out sometime in the week of April 6th. Now, I would say because it's millions of people, literally, this is affecting over 90% of taxpayers that are most likely going to be eligible. It's going to take a while for the government to send out millions of checks. And it's not going to be probably all at once on April 6th, that week of. So I would say in your mind, just to set yourself up for the right expectations, maybe sometime in May will be a good time for you to get it. If you get it sooner, then even better. You don't have to do anything. The IRS is going to automatically just send you the check. Now, here's one thing that really upset me, because when I was reading the guidelines, it states that people who have a work eligible Social Security number can get the stimulus. Now, there are people who are not resident aliens of this country, but they still get an individual tax ID number, an I-10, because they still want to work, they still want to pay taxes. Well, guess what? The IRS says, well, unfortunately, even though you're paying to the system, you might have gotten laid off. If you have an I-10, you're not going to get this stimulus. You're not eligible for it. And if anybody in your family, let's say you have a joint return and your spouse has an I-10, you might be here legally in this country, you have your Social Security number, your spouse doesn't, you're not eligible for it either. Or even if your child doesn't have it either. So it's very, very unfortunate. And there's one exception, like if your spouse served in the military. But other than that, if you don't have a work eligible Social Security number, do not expect to receive this stimulus. So I just want to lay that out there, because I know a lot of people are in very need right now and they might be in that situation. And unfortunately, they won't be getting anything. And I just want to make sure they know it right off the bat so that they're not having false expectations. Now, what if you're on Social Security only and you don't file a tax return? Like my parents, for example, they don't file a return. Well, very good question. If you get Social Security and you don't file a tax return, but you do get your Social Security form 1099 SSA at the end of the year, you will be receiving the check automatically as well, as long as you made under the threshold amounts. And the IRS will send the check to where you currently receive your Social Security payments, as long as you did not exceed those income limits. So something else to keep in mind. The checks will not be taxable. This is a good one, because I was actually wondering about this, because sometimes I was like, what if you get this check and then to add insult to injury, then you have to pay taxes on it? But no, I am glad to see that you will not pay income taxes on this money. It will be a tax-free event for you, which is great. If your income is lower than the year before, or you move bank accounts, this is something I mentioned earlier, you might want to file your 2019 tax returns if that income level still helps you stay under the limits. Or even if, for example, you made less money in 2019 than you did in 2018, you might want to file 2019. So there's a planning opportunity here. You might want to talk to a financial planner. You can call me as well with that type of situation. Send me an email if you have a question of that sort. There's some planning opportunity there. If you have not filed your 2019, you want to compare it to 2018, see which one works out better for you, because you might get a bigger check doing one way or the other, or maybe waiting. If you made more in 2019, you might want to just wait and not file 2019 until you get the check, because the IRS has extended the deadline to July 15th, which is one of the things I'll be covering shortly. If you owe taxes, another question my clients have asked me. Let's say you filed for a prior year and you owed money and you're currently on a payment plan, or you still owe money to the IRS. The good news is that you are still going to get your check if you're eligible. You're not going to get the check applied to a previous balance that you owe the IRS, because the whole point is for them to help people out and stimulate the economy. So that's the good news. However, if you are on child support in arrears and it has been reported to the federal government, you might get a reduced amount, because that might be applied towards whatever arrears you have as far as child support is concerned. Here's another benefit for individuals. Typically, if you take money out of a retirement account, an IRA, for example, and you're under the age of 59 and a half, in addition to paying income tax, you also have to pay a 10% penalty on top of that. So, for example, if you took out $10,000, you'll pay income taxes on the $10,000 plus a $1,000 penalty, right? 10%. Under this stimulus bill, if you take money out of your retirement accounts for corona's related distributions up to 100,000, the IRS is going to waive the penalty of 10%. Now, this is something I like to point out because a lot of the times you might read an article that says, oh, you can take out up to $100,000 with no penalty. And the way I would read it is like, oh, great. It's like there's no negative impact on it. But no, it's the fact that they're waiving the penalty, you still have to pay income taxes on it. Now, luckily, if the distribution was for a corona's related distribution, you will have 3 years to pay the taxes on that distribution, or basically you can spread it out over a 3-year period, which is great. It's quite a break because right now, if you take money out of an IRA, if you don't put it back within 60 days, you have to pay the income tax and the penalty if you're under 59 and a half. So it's still helpful, but I just want to point that out because it's not just 100% with no consequences. They waive the penalty. You have 3 years to pay the money, or if you have the money, you will actually have 3 years to roll the money back into the plan if you so choose, which is another great benefit of this plan. One of the things to keep in mind, the definition of coronavirus related distribution is similar to other federally declared disaster relief. So if you took money out, it's pretty broad definition. So if you were laid off, for example, you had to take money out, things of that sort, you qualify for the coronavirus related distribution waiver of the penalty and the ability to roll it back within 3 years or pay the taxes within those 3 years. Another thing for people who are over the age of 70 and a half who were required to take their required minimum distributions from their individual retirement accounts or 401ks, that's going to be suspended for this year, which is great because a lot of the times people have to take money out of their IRAs that they don't need to, but it's required by the government because you need to pay taxes on it. So if you don't need it, if you're in a good situation where you don't need to take this money out, you don't have to take this money out and don't necessarily pay income taxes on it. Also, for first timers that just turned 70 and a half and were required to take their required minimum distribution this year, as well as two of them, their first one and then the one for this corresponding year, you can actually waive both the 2019 and the 2020, which is also a great opportunity for planning there if you don't need the money. Unemployment benefits have been extended up to $600 per week for up to 4 months. And the great news about this too is that it has been expanded to include self-employed individuals, because typically a contractor that gets a 1099 is not eligible to get unemployment benefits because they're not technically an employee. They're a contractor. Well, now, if you're a 1099, you're my real estate agents out there, my Uber drivers, anybody that's a contractor that gets a 1099 at the end of the year, if you were impacted by this, you lost some income, you're now eligible to file for unemployment benefits for $600 a week up to those 4 months. So that is a great benefit. Now, keep in mind that unemployment benefits are done at the state level. So you want to go to your individual state to make sure that you file that claim. And give them some time because they might have not yet just adjusted, but keep checking your state's unemployment website. And they're waiving the 1 week waiting period as well. So you could just file for unemployment and start receiving your benefits right away. Another great tool for individuals, the deferral of federal student loan payments through September 30th, 2020. So you're getting to defer for 6 months with no interest, no penalties, no negative impact on your credit. So if you have been impacted, now this is not automatic. If you have federal student loans, you call your servicer and you let them know that you would like to take advantage of the stimulus forbearance, basically, and you will be able to extend your payments for up to 6 months, zero interest, zero penalties, no negative effect on your credit report, which is great. I know some of you have employer benefits where your employer pays for some of your student loans up to $5,250. Well, now if that's the case, you will no longer have to pay income tax on that benefit. So your employer can continue to make the payments if you so wish, and you don't have to worry about paying income tax on that, which is great. The tax filing deadline for both filing and payment has been extended to July 15th. So instead of April 15th, you now have an additional 3 months. Now, here's another opportunity for planning where I tell people, just because you could wait until July 15th, I don't think you should wait until July 15th. So, for example, obviously, if you're getting a refund, you want to make sure you file right away so that you get that refund process. And obviously, take into account whether 2018 or 2019 was better in terms of you qualify for the stimulus check. However, if you owe money, you have until July 15th with no penalty or interest, but you should probably still file your tax returns, or at least get them prepared so that you know how much you owe, and then you can do some planning. And then you have 3 months to plan. You don't have to wait until 3 months to find out what you owe. Just do them now, and then you can extend the payment automatically. Just because you file now doesn't mean that you have to pay. So if you owe money, you can file on April 3rd, and you still don't have to pay until July 15th. So something to keep in mind. Also, if you owe money, you can do a payment agreement. And that's one of the resources that I'll put as well. You don't have to pay it all at once if you don't have the money. If you were laid off, for example, you owe money, or you were self-employed and you just didn't have enough money to pay the IRS in full. Not only do you have until July 15th to file and pay, in addition to that, you can apply for an installment agreement. And I'll put the link in the resources as well, which is a great tool. Also, for my self-employed individuals out there, if you send estimates to the IRS during the year, the extension for that first, the estimate that's due April 15th has also been extended to July 15th. However, the second extension that's due June 15th still has to be there. So it's kind of funny in a way, because now you'll be paying your first quarter estimate later than your second quarter estimate. So you still have that June 15th deadline for your second quarter estimate, and July 15th for your first quarter estimate. Another thing that has been relaxed on the rules is loans from your 401ks and other employer-related plans. You can now borrow up to $100,000. Before, the max was 50, and now you can do up to 100% of whatever your vested balance is in your 401k. So if you've been at a job where you have 100% vesting, meaning that all the money in there is yours to keep, including the contributions from your employer, you can now borrow up to 100%, up to $100,000 on that 401k or employer retirement plan. And the payments on the plan can be deferred as well. And money that you owed before may be delayed for up to 1 year. So that's another great benefit. Also, for my charitable people out there, if you want to help out somebody else right now, another organization that's a 501c3, for example, you can get an above the line deduction up to $300. This is above the line just means even if you don't itemize, you can take a $300 deduction from your income by being charitable. So that's something to consider. You know, if maybe you haven't been impacted and you have some money you'd like to help out, that might be a good option to do. Just keep that in mind that now you get some tax benefit for it, where otherwise before you might have not if you weren't itemizing your taxes. The adjustable gross income limit for charitable contributions has also been temporarily repealed. So if you have cash contributions, there are some limitations to the type of organization. It has to be a cash contribution, and it could be up to 100% of your adjusted gross income. So talk about a planning tool here. For those of you that are charitable and have not been impacted by this could be a great planning tool for you to donate some money and really lower your taxable income this year. Something to keep in mind, something you want to talk to your accountant about, your financial planner as well, for sure. Now, let's talk about small businesses for a second, because I know a lot of my audience here are self-employed or they have a small business up to 500 employees. You'll be able to take out loans up to $10 million, depending on your payroll costs and other factors, fully guaranteed by the Small Business Administration and issued by Small Business Administration approved lenders. You must apply by June 30th, 2020, and you have a maximum duration of 10 years to pay that loan back. The maximum loan amount is either 10 million or 2.5 the average monthly payroll. Check this out. Maximum interest rate, 4%. That means max. So you can get a lower payment. You know, you might get lucky out there. Some lender might lend you money at 1%. You know, most lenders are probably lean towards the 4% mark. But if you think about it, 4% interest rate, and you can defer the payments between 6 to 12 months, that is a pretty cool deal if your business needs that cash flow right now because you had to take a hit because your business had to close or you just lost some customers as a result of the slower traffic because people are being quarantined. Check this other thing out. Loans will be eligible for forgiveness if they're used to cover payroll and other expenses, and a tax credit for employee retention during the 8-week period following the issuance of that loan. Now, this only applies if you have the same number of employees from February 15th, 2020 through June 30th, 2020, as either the same period during 2019 or January 1st, 2020 to February 15th, 2020. The reason for that is because basically they just don't want you to lay people off. They want to keep people employed. So if you meet that criteria, you can get those credits as well. And also another thing to keep in mind, no employees that make under $100,000 in compensation, if they have reduction of less than 25% compared to the last recent quarter. So that's another loophole there that you got to be aware of to make sure that you qualify. Also, you can delay your employer's portion of Social Security payments for tax year 2020. 50% is due December 31st, 2021, and you can even defer the other 50% to December 31st, 2022. They really want to make sure that small businesses are able to thrive under this situation and keep people employed. Now, this also applies to self-employed. So when you're self-employed, you pay both halves of Social Security. You pay half as an employee, half as an employer. You can also defer the employer portion of your Social Security taxes. Also, there's going to be a $454 billion emergency lending to states, municipalities, airlines, and other businesses that were affected by this. So they're pumping a lot of money into this economy. They want to put it into the hands of governments, municipalities. They want to put it in the hands of individuals. They want to put it in the hands of small businesses. I think this is going to be a great stimulus package, and they're going to monitor it. And there's talk of perhaps having a second round of stimulus checks if need be. So they're going to keep seeing how the stimulus plays out. Now, talked about employee retention credits. So just make sure you speak to your accountant about that. You want to make sure that you qualify because there are certain guidelines that you need to follow to make sure that you qualify for the loans, the credits, by keeping people employed and having a certain reduction of salary and workforce. Real quick, net operating losses. They can be used to offset 100% of taxable income. So talk about another planning tool right here. If you have a small business and you have net operating losses, speak to your accountant about this. They can be carried back up to 5 years, and it applies to 2018, 2019, and 2020. So there's a great planning opportunity here. If you do have some net operating losses, might be able to really take advantage of the new relaxed tax guidelines in this. So let's talk about now, what steps should you take if you have been affected? I want you to take action. A lot of things are not going to happen automatically. The only thing right now that I can tell you will happen automatically is if you qualify for the stimulus payment, you're going to get a check either in the mail or in your bank account. Other than that, you have to be proactive with everything. Number one, contact your creditors. If you have a mortgage, Fannie Mae, Freddie Mac right now say that you can extend your mortgage payments up to 12 months. You have to contact your lender, your servicer. Pick up the phone, look at your last bill, call that 800 number if you need it, telling me you want to take advantage of the stimulus package that they have and whatever forbearance options they have. Okay? Make sure you do that. If you have student loans, you can take advantage of the 6 months, but it doesn't happen automatically. So if you have federal student loans, make sure you contact your servicer. You know, if you don't have federal loans, you have personal loans, they're not part of the stimulus package, but still call them anyway. They might just give you a couple of months break regardless. It doesn't hurt to call. Be proactive. Utility companies, they're taking charge. I've seen some emails go out. If you haven't received one, call them up and say, hey, I'm having trouble making my payments. You know, defer as much as you can if you have in fact been impacted by this, your spouse, somebody in your household. If your household income has gone down, make sure you take advantage of these things. Call your credit card companies. I have clients that have called their credit card companies. One of my clients called one of the creditors, and the creditor was like, yeah, don't worry about it. We'll give you 2 months where you don't have to make payments. And they said there was going to be no negative impact on the credit and no penalties. Obviously, interest still accrues. With the student loan servicers, the good thing is that for those 6 months, there's no interest accruing. So you can defer the payment. It's not like your balance is growing. With the credit cards, more than likely than not, yes, your credit balance will still be accumulating, but at least you're not required to make payments for several months if you get to talk to them. What if you rent? Speak to your landlord. Right now, there's a moratorium on foreclosures and evictions halted for 60 days. So, maybe you can make your rent payment. You talk to your landlord. He or she might not be able to make their mortgage payment if you're not paying their rent payment, but at the same time, they might be able to take advantage of one of the programs with their lenders and defer their payments. And the same goes the other way. If you're a landlord, talk to your tenant about it. Get in front of it. Ask them, hey, do you still have your job? Do you still have your same level of income? Are you working from home? Just get the information so that you can prepare, because you might have to call your mortgage company and deal with it, because maybe you on your own, you're well, but maybe your tenants aren't. So something to keep in mind. Companies that are hiring, hey, you know what? We got to do what we got to do to put money on the table. So it doesn't matter, even if you didn't go to school for it. Right now, there is a great demand for different fields. So companies like CVS, local pharmacies, Amazon, Walmart, supermarkets, they have had a surge in demand. They're hiring. So, if you lost your job and that's all that's available, go for it, I'd say. You got to put money on the table, right? Take advantage of the tax return extension deadline if you owe, obviously. But like I said before, you want to make sure you plan. Just because you have an extension to file doesn't mean that you should not file, or that you shouldn't at least have your tax prepared so that you know what you owe. And then you can plan ahead. Determine if you can do anything to improve your chances to receive the stimulus payment. So that goes back to deciding, well, have I filed the 2018? Have I filed the 2019? Which one would be better? So you might be at a point where you have not filed the 2019. You might want to just hold off if 2018 numbers are better for the stimulus payment. Or you might want to file if you actually made less money in 2019, because you might get a bigger stimulus payment if you were over the threshold. So something to consider. Another thing I'm going to put in the resources is change of address. If you filed the 2019, let's say in February, and you just moved, the IRS is going to send a check to your old address if you don't have direct deposit. So if that's the case, make sure that you file that form with the IRS so that you change the address and you get your check on time. I'll put that in the resources as well. Now, let's talk a little bit about opportunities if you haven't been affected. Let's say you still have your same level of income, your job, etc. How about contributing to your retirement accounts? The deadline for contributing to a Roth and a traditional IRA are the same as the tax deadline. So typically April 15th. Those two have been extended to July 15th. So guess what? Let's say you're under the age of 50 and you are eligible to contribute up to $6,000 to a Roth IRA, but you haven't done so yet. Well, now you have until July to do that. An additional 3 months. That's a great planning opportunity. Perhaps you should look into maxing out, going back towards maxing out to 2019. So something to consider there, another planning opportunity. Should I buy more stocks? That's something to consider. I know right now the stock market is not looking good, and maybe that's the case for somebody who's already in retirement, drawing for the money. They might not want to take too much risk. But what if you're in your 20s, your 30s, or your early 40s, and you have 10, 15, 20 years before you retire? Should you maybe invest more in stocks in your 401k or outside of your 401k or in your IRA? There might be an opportunity there, because you might be buying things while they're lower and you have enough time to allow for a rebound. Obviously, you want to speak to your financial planner about this and make sure that this is the right thing for you, but there might be some planning opportunity there. What about if you own a home? Interest rates are really, really low right now. If you bought your house several years ago, you might have a rate in the fives or maybe high fours. You might be able to get something in the threes right now, an opportunity for you to refinance and lower your mortgage payment. Or what about doing the opposite of lowering your payment and maybe increasing your payment by a little bit, but cutting the term of your loan? So I have a client, for example, that bought a house 10 years ago. They have 5.25 right now. They can get a rate in the threes, but they can refinance into a 15-year loan and maybe increase their payment by like $120 a month. But guess what? They can knock out 5 years off of that loan. So something else to consider if you haven't been impacted. There's a lot of opportunities out there for you to take advantage of. If you're charitable, Maybe you can donate to an organization that helps those in need. The tax breaks allow for it right now really well. They might be able to take advantage of that. That's another planning opportunity, and you be able to help somebody else. Like I said before, if you are a landlord, maybe you can give your tenants a break. If you had a tenant for years and years and they're really good, you might take advantage of some of the stimulus stuff and maybe cut them a break. Not necessarily let them skip rent for you can put it on the back end or maybe make an arrangement, but definitely have the conversation, take action. Also, if you are at the age where you're required to take a required minimum distribution from your IRAs or 401ks, another planning opportunity here. You don't have to this year. So if before you just taken it because it had to be taken and you were paying taxes on it for no reason, well, now you don't need to. So speak to your financial planner about that as well. So I want to give you some final thoughts. These are not financial things. I feel like a lot of us fail to take care of ourselves during these times. We're working hard. We might be home. A lot of you are home taking care of your kids. Now you're doing homeschooling. You might be working from home and doing homeschooling at the same time. I have clients that are going through that right now. It's very stressful. Make sure to take some time away just for you. Have some me time. You need to sharpen the blade, as they say, right? Go on a walk if you can do it safely while social distancing. I do that with my wife. We go out here at our complex. Hardly ever come in contact with any human being, but we go out for a half hour, get some sunlight, some fresh air. Another thing I like to do, I did it usually over the weekend, go on a news diet. I turn off all my cell phone notifications for social media and news applications. So I have no idea what's going on in the world. I'm like, if it's big enough, I'll find out about it from somebody. I mean, we're already going through tough economic times. And every time I turn the TV on or pick up my phone, all I hear is COVID-19, coronavirus, infections, economic downturn, the market's down. I mean, you can't keep a positive attitude if you're constantly feeding your mind with those things. So, it doesn't hurt. Just go on a news diet, social media diet, 2 days. Do it one day at a time. See how it feels. Do an at-home workout. That's another thing I do. If you can't go out for some reason, you have the kids in the house or, in your local area, it's just not safe to do so. There's a lot of plenty workouts that you can do out there. Even on YouTube for free, you could just find at-home workouts. So make sure you stay active just because you're home. I know I want to eat up all the food in my fridge, but definitely make sure you stay active. Call an old friend or close family member that you haven't spoken with in a while. One of the things I did, in fact, yesterday, I did a virtual happy hour with my 5 siblings. There's 6 of us and my parents all over the United States. I just set up an online meeting and sent them all a link. They signed up. Everybody had their drinks. We had a great time. We saw each other. Obviously, it doesn't replace the human contact and being there, which is what we'd rather do. But guess what? Desperate times calls for desperate measures, right? And we had a great time. So that's something else you can do. Instead of like texting or anything, just, when was the last time you spoke to your friend, your brother, your sister, your uncle, whatever it is, your parents, call them up, ask how they're doing and see, sometimes people just want to hear from you. And the fact that you reach out is something very positive that just brightens their day. You never know the impact you have on somebody just by a simple phone call and simple, hey, how you doing? I'm thinking about you. So make sure you do that. Focus on what you can control. There's a lot of things that you cannot control. So think about if you worry about something that you can't control, you're going to drive yourself mad. Just do what you can. There's a lot of tools that you can use. There's some things that you cannot. And unfortunately, if you just stay up at night thinking about these things, it's not going to have any good impact on your health, physical and mental. There are some resources I'm sharing in the resources, so be sure to check them out. The IRS change of address form, 8822. I have a link to that if you need to change your address with the IRS. IRS coronavirus information page, very important because they're going to keep information as far as like when the checks are going out, when to expect and things like that. USA.gov information page, I put it up there. There's also USA.gov information page en español. So para mi gente que habla en español, USA.gov information page en español. Les tengo la página ahí. Just click. And also, if you want to have some fun, I put a stimulus payment calculator that's from Kiplinger. Pretty fun. You just go in there, you enter your adjusted gross income for either 2018-19, your filing status, and how many children you have, if any, hit submit, and it's going to tell you how much of a refund, how much of a stimulus payment you're eligible for, if any. So I I've had a great time putting this together for you. I know it's a lot of information. So what I like to do is I like to offer my services to you for free as far as a 15-minute consultation. If you have a decision that you need to make, you have a burning question that you're just not sure about, or if you think that there's one way that you need to do something and you just want to confirm, you want to just an ear from a financial planning professional, feel free to reach out to me, schedule an appointment, 15 minutes, no charge. I'm here to listen. Send me an email, luis@buildabetterfinancialfuture.com. I'd love to help out any way I can. It's been a pleasure. And just stay safe, stay well, stay positive. We have been through a lot of bad things in the past, and I think that we will prevail. So thank you all for listening. And I look forward to speaking to some of you that will reach out, make an appointment, or send me an email. Have a great day.
Thank you for listening to On My Way to Wealth. If you have any questions, we'd love to hear from you. Send Luis an email at luis@onmywaytowealth.com. To read the show notes and the blog, please visit www.onmywaytowealth.com. Luis Rosa is an investment advisor representative of Retirement Wealth Advisors, Inc., an SEC-registered investment advisor. Build a Better Financial Future and Retirement Wealth Advisors are not affiliated. Exposure to ideas and financial vehicles discussed should not be considered investment advice or recommendation to buy or sell any financial vehicle. This information should not be considered tax or legal advice. Individuals should consult with the professionals specializing in the fields of tax, legal, accounting, or investments regarding the applicability of this information for their situation. Past performance is not a guarantee of future results. Investments will fluctuate and when redeemed may be worth more or less than when originally invested.